Good evening, folks. Welcome to TalkGunStockTrading.com. This video is for Tuesday, February 11th, 2014. All right, folks, let's get right into the action today. The market surged higher, just as we thought was going to happen. Again, we didn't know certainly the magnitude of this surge, but we knew we would be getting an up moves every since last week, Wednesday, Thursday, Friday, and into this week. However, we are into that window now. We're in the danger zone, so to speak. We're in the zone where the market should be showing some weakness. We're coming into a time cycle as well, so a couple of factors are pointing to me that we may be seeing some weakness in the near term. So what we did today is we got out of the SSO, sold our second half of the SSO for over an 8% gain, and we started easing into some short positions again. And this stuff, all these moves are telegraphed on the traders forum as well as in the Fox 3 alerts. So come on over to TopGunStockTrading.com to get those alerts and follow alongside of our pros here at TopGunStockTrading.com. Here I got the weekly chart of the spiders. I just want to show you the trend line that I've got coming all the way back to November of 2012, the lower trend line as well as the upper trend line. As you can see, so I've got some resistance lines in there as well, and last week we came right down into this lower trend line. This is where I bought the SSO. Down here we're in the S&P was about, or the spiders are about 174, Pearson 174. We bought the SSO at 91.21, and then we took our our first half off yesterday, and took our second half off today for probably averaged 7% gain, I would say, with the average of that trade. All right, what do we see? Let's look at this the 10-minute pattern from the last week. Let me make sure I don't have the after hours reporting on extended session, so it doesn't muddy the playing field, so to speak. All right. So if we look last week, we came back in here. That was a big sell-off day back on the 3rd. We bounced once, came back down, retested those lows, it bounced again, and up and away we went. This looks like a lot like a W pattern, which it is. And those W patterns are very powerful patterns, and they will certainly confirm that level at about 174. And they also confirmed to me that we'd have some pretty significant upside. As you can see, we kind of paused once we got up to this 177.32 level. That line has been in there since before last week, where I said that we would get a couple minor bounce days, pause days, like we said. Went a little bit lower after that, but as you can see, when the market comes back up to it, that's a confirmed level of resistance. You'll see how it pauses just below and then right on it, and then it takes another day to gap up before it's still on its merry way. So that will probably be some form of a minor support on the way back down, but just keep in mind, if we ever close below this 174 level, this market could be in for some trouble ahead if we ever get below that 174, and I think we will coming up here into March time frame. Maybe towards the end of March, we may be testing those lows, and we could be going lower into that after that March time frame or time cycle there. So we surged up through this first resistance level, paused, and then surged up, and then we are into the second resistance levels. You can see we got above it, and towards the end of the trading day, we came back to that 181.82 level, and you can see we closed just above it by 16 cents. So we see what happens tomorrow. We might get what we call a pop and drop. In other words, the market will gap up there and just kind of roll over. Usually that's what happens when you get those last few average investors in there to buy into this market. They'll gap it up pre-market. Everybody jump on board because they think this is the last train leaving for new highs, and then they just sell it right from underneath, and you get this big rollover, this big reversal day, and that's probably what I'm looking for or expect to happen sometime in the near future, i.e. Probably within the next couple trading days. uh, maybe a gap up to this level, 183, and then just to kind of roll over and downtown we go. All right, so that's what I'm looking for. They get the most. Why do I think this? Well, when all the talking heads on CNBC are now suddenly bullish, uber bullish on this market, nothing can go wrong. Gartman, I think, said that he's uber bullish on this market. All the news out is pointing to rosier times ahead, blue skies ahead. I think the Chinese data came out tonight where their Chinese export data surprised everybody 10% to the upside or some such nonsense, whatever kind of nonsense or manufactured numbers the Chinese are putting out. Hey, look, the Chinese aren't just the only ones putting out manufactured data. Everybody's putting it out. U.S. is notorious for putting out this manufactured numbers to get the response they want or to manipulate this market. So it's not the Chinese, it's all the central banks and the central governments are putting out this. Today, emotions high, especially after the Janet Yellen testimony. First time she's, since her hearing, Senate confirmation hearings, that she's tested in front of the Congress. Hey, she didn't say anything new. There's nothing new that she said, but the markets loved it. And you can see after that she was done, they just surged higher and they just kept going higher the whole day. Uh, Nothing new, she said. Again, it's just euphoria turning into euphoria. And when everybody on TV is euphoric and thinking nothing can go wrong, that's when I'm going turning around and I'm starting to add to some short positions, starting to ease into some short positions for the big down, big down day here or time frame coming up. So, what else do we have here? Going to the daily chart here. I just want to show you a couple things that I'm seeing on the daily chart. We just went through the 10-minute and then the weekly chart, especially for that you can see the support and resistance lines here. But as I scale back out of this, and so we can kind of take a look down to the details of this market, you'll see that what I want to bring out to you once I get this down here, and I apologize for the nonsense scale of this thing. Once I get this thing set, okay, here we go. I want to cause attention to the volume of the last couple of days. So you can see these big down days. There we go. Whenever we had a big down day, our volume, correlating volume was pretty high. So these are distribution days. This is when the institutions are distributing shares to the average investor. And as you can see, on these big up moves, the volume has certainly tailed off during those big up moves. So ever since that last big down move, you can see the volume goes down, and this surge higher in the price of the spiders, or the value of the spiders there. So telltale sign of distribution, and institutions are not participating in this move higher. What's that tell you? The market's going up on thin air again, and it's about time for a down move here coming up. Listen, it went down last week on all the currency issues, Chinese issues, and such. We haven't fixed a thing since last week. Nothing has changed since it. The problems are still there. It just proves to you that the market's moves are based on technicals, i.e., price, time cycles, the patterns. It's all technicals. And the news or the media will generate the news to fit or correlate with the market moves. So if the market surges higher, it must be such good news. They put the spin on the data as being awesome and good and the best ever. If the market's going down, then it must be currencies in Argentina or the price of butter in Antarctica must be driving this market down. So you can see the nonsense that they're putting out. But it's the same problem still exists. Nothing has been fixed as of yet. So that's one of the reasons why we got out of our long positions, and we're easing into some short positions. I got into the SDS at $30.30. Again, you can see that on the trader forum. I gave that one out for free. So today it closed at $30.32. I got in at $30.30. Let me get back to my SDS here, which is 2 times short the S&P. All right. Again, I don't on these 2-time ETFs. I don't go off these ETFs charts to make my entry points. I go off the single or the one-time ETF, which in this case would be the SPY or the spiders. But I just wanted to show you I did get in at $30.30. It went as low today as 30.17. We'll see where it goes. I just eased into a half position, so I expect basically we're in the window of this market going down. So could it go higher? Sure, it can go higher. Like I said just now, I expect a gap up before this market rolls over. So I'll ease into my second half position. Maybe tomorrow. We'll see how the market reacts tomorrow, or even the next day. Let's move on to oil. Oil is consolidating below my resistance level. So when a price of an equity consolidates below a resistance level, I don't like that resistance level anymore. So you can see big surge up, sideways consolidation right above a moving average. Now normally I would take this trade as a long, or be looking to take this trade as a long, but it's moved up so far from the lows that I can't possibly buy it up here when just a couple weeks ago it was down here in a $33 level. So the reason is the risk reward is not that great. So in other words, yeah, I could buy it here and it can move up from 35, 50 to 38, which is $2.50, or it could come all the way back down to double bottom, which is 33, so it's about $2.50. So it's a 1-to-1 risk reward. Not my kind of risk reward ratios that I'm going to take. So what I'm going to do, I'm going to wait for the higher percentage trade. We talked about this 36 level, and now it's consolidating right below that. So it's building up pressure to go above that 36 level. So my next resistance level is going to be at the $38 level. So that's going to be my no-brainer short level on the oil there is when the USO hits 38, and I'll be playing that via the SCO. So that's going to probably take a while before it gets up there. In the meantime, we'll just monitor USO. Taking a look at gold. Gold had a beautiful day today. It's a shame I didn't get a good long position off. I've been talking about this for weeks and weeks, trying to get into a nice pattern, but it's just been too choppy and sloppy for me to get a good entry price on it. Today it moved up another 1.17% without me. What am I looking at now with gold? I'm thinking this thing could be a good short if it comes in to the level the right way. What's the level and what's the right way? What do I mean by that? Well, here we have a big a surge higher. The right level is right in this 200 moving average, as well as some pivot points back here. There's a gap fill right below it at 126, and there's also a pivot right above it at 127. And the actual 200 moving average, as you can see over here, it's at 126.71. So anywhere in between that range, 126 and 127, would be where I'll be looking to get off a short on the gold ETF. Now that's if it comes right into that level, probably not tomorrow, but the next day. So I'm looking for another, maybe another pop higher, maybe another $1.50 higher, and then on maybe Thursday another $1.50 into that level. So I'll be looking to buy gold probably Thursday. Again, not just the price level, which is important, the timing level and the way it comes in, the pattern it puts in coming into that level. That's a three-dimensional trade. In order for me to take that trade, how am I going to take the gold short? You can either short it via shorting the gold ETF, or there is a ETF 2 times short gold, which is the ProShares Ultra Short Gold, or the GLL, and that's what I'll be probably playing with the gold short, with the GLD short. Again, 2 more days. Is Thursdays where I'll be looking to have that trade coming into that level. So again, this is a 2 times ETF. Again, I don't play or determine what my entries are off of the 2 times ETF chart. I go to the 1 time, or in this case it'd be the GLD chart, and I'm looking for. I'll do the mathematics, the calculator involved of that, and I'll put that out probably tomorrow evening. Sometime. We'll see how it goes see how it reacts tomorrow. But it's going to be between 126.50 and 120. Excuse me, between 126.50 and 127, somewhere in that price range. Again, why am I looking to short gold when I've been talking about all this time I'm going long gold? Well, as a trader, you have to be nimble. And when the charts tell you to go long, you go long. When the charts tell you to go short, you go short. And that's the life of a trader. You have to be nimble, and be able to swing either long or short, depending on what the charts are telling you. Again, I hardly ever listen to the news. I only listen to the news, to be honest with you, to get a measure of the emotion out there. So, is there fear in the market? Is there greed in the market? And when the microphone and talking heads are last week are telling me that the sky is falling, it's time to go long, which I did. And this week they're telling me that nothing can go wrong with this market, that all is well again with this market. That's telling me I need to probably starting to short the market. So you be the judge, and we'll see. We'll let the tape uh, uh, tell the truth, because after all, the only measure of success is going to be the tape, and that's the market. All right, moving on. What did I get into? We talked about on Sunday, looking to get into some Goldman Sachs here. It got as high as 164.96. I did get into some Goldman Sachs short towards the end of the day here. I don't know my exact entry. I have to look at the charts, or look at my account there. But I believe it was a Pierce of 164. I got a short off on GoGS 163.69. I believe is what I had it set up for. So we'll have to look at that. Anyway, I'm short GS or Goldman Sachs at this level based on the pattern, this inside bar, bearish consolidation. There's a time factor involved in that, and we're consolidating right above this support line. And as you can see, 160.01, pretty powerful support line. It wouldn't have been a bad long to go long back here when it pierced at the 159.77. You could have made a quick $5 on that, or whatever, 2.5%. Again, it started consolidating, so there's no way I would have went long after it started consolidating right above that level. Today got a little pop with the market, up 2%. I think the market was only up 1%, so it definitely outperformed the market. We'll see how it reacts tomorrow, but I am short Goldman Sachs at about the 163.69 level. Another stock I went short is the IBB. I've been talking about this for a while. I got a 3-bar surge into a double top here is what I was looking at there for a short. I think I got that one off at 254.66. Ironically, it closed at 67, just a penny off. We'll see how that reacts as well. Again, when the overall market's telling me that there should be some weakness, I'm more apt to start looking elsewhere and getting some shorts off on some individual stocks, or in this case for the IBB, a sector or the biotech for that. So last time we were short from up here at Pierce of, I think we were short at 248 if I remember correctly, and we covered our shorts right here at 238 for a $10 gain. And then it's back up there. Is this a W pattern? It sure looks like it, but I'm not too worried about it, because these bullish patterns at the tops of charts have a high tendency of failure rate. So we should get some sort of a pullback off of this level, just based on the 3-bar surge into the double top pattern there. So we'll see how that goes. For IBB. All right, I talked about the SDS short. Another stock I did short was Apple. And you can see Apple's right into another resistance level. Again, easing into these shorts. 536.29 was my entry on that on Apple. Again, I think this has a possibility to go as high as 542.72. You got my proprietary resistance level there as well, master level. Also had the 50-day moving average at that, and there could be a time factor involved with this trade as well into that level. So I'm short Apple as well, and there's even a gap fill a little bit higher at 550 level with an even number. I've been in also a nice play. So we'll see how Apple reacts into this level. Uh, Lots of good news out on Apple. Again, this stock was down in the doldrums. They're putting Apple's going to zero down here. Not really. They didn't really say that, but it seemed like everyone was negative on Apple when it's down here, and now when it's up here, Icon's okay. He's withdrawn his request for Apple to buy back stock. Apple made the best decision ever by buying back $14 billion worth of stock back here. They're the smartest company ever. Kramer's putting out that he thinks Apple's got something in the pipeline to dazzle the crowd, or whatever the heck I read yesterday on CNBC. Just kind of, you'd be amazed at the stock price, the news that the media tries to correlate with the stock motion. It's not the other way around. Uh, it's kind of funny to watch that go on. Anybody can be a financial reporter. Just look at the price of the stock, think up something new, or look for the good stuff, and then write an article about the good stuff or why the price went up. And the vice versa is true when the stock's down in the gutter there. Find every reason why you should be negative. Again, another reason why these analysts put upgrades when stocks are at their 52 two-week highs and downgrade stocks when they're at their 52-week lows. It's pretty amazing how it works. But that's the story. You need to be the professional traders are on the right side of the trade. They understand what's going on here. They understand the rules of the market and how the media works and how these talking heads pump these stocks. They understand where the institutions are putting their money. And let's be honest, the institutional money is what moves these markets. So you want to be where the institutional money is. You want to be trading with them. You want to be the remora on the sides of the sharks, or the institutional sharks out there, so you can make money. All right, folks, enough of me on my soapbox. Like I said, let's get a quick recap. I'm expecting this market to come into some resistance here, show signs of trouble. I don't know how deep the pullback's going to be. I never know the magnitude, and to be frankly, I've been humbled more than once by these markets, so I am not 100% correct all the time on these markets. I can only tell you what the charts are telling me. Again, I'm just looking to be 80% correct every time. So again, I don't know how deep this pullback will be, and I can't even guarantee it's going to be a pullback. Just the charts are telling me that's what's going to happen, and I position myself as such to capture those profits. All right, folks. Till next time. Have a good night. See you.